Assalamualaikum dan salam sejahtera. Kami mulakan bulletin AWANI jam ini dengan perkembangan mengenai KDNK Negara, di mana ekonomi negara ataupun Malaysia tumbuh 3.6% untuk suku ke-4 2021. Ia disokong pemulihan dalam permintaan domestik dan pertumbuhan juga disokong permintaan luar. Ini menjadikan pertumbuhan keseluruhan bagi 2021 kepada 3.1%. Kita ikuti pengumuman penuh prestasi ekonomi suku ke-4 2021.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi dan salam sejahtera. Terima kasih kerana menghadiri sidang akhbar pagi ini mengenai prestasi ekonomi negara pada suku keempat tahun 2021 dan juga perkembangan monetary dan kewangan. Seperti biasa, Datuk Seri Dr. Mohd Uzir Mahidin juga turut bersama kita pagi ini pada sidang akhbar pagi ini. Dan Perangkawan Malaysia ialah agensi rasmi yang mengumpul dan menerbit Statistik KDNK Negara. Please allow me to continue the presentation in English since we are speaking to an international audience. In the fourth quarter of 2021, the global economy recovery continued amid reopening of more economies and further expansion in manufacturing and trade activity. Nonetheless, COVID-19 resurgence towards the end of the quarter dampened consumer sentiments and prompted many economies to reimpose mobility restrictions. This affected the recovery of services activity. In addition, inflation in major economies remained elevated as demand recovered, while supply disruptions continued despite some early signs of easing. Let me now hand over the presentation to Datuk Seri Dr. Uzir to announce Malaysia's GDP performance in the fourth quarter of 2021.
Assalamualaikum warahmatullahi wabarakatuh and very good morning, Honorable Tan Sri Gabenor, ladies and gentlemen. Thank you very much for having me for this session. In the fourth quarter of 2021, the Malaysian economy grew by 3.6%, supported by the recovery in domestic demand as economic activities resume and continue strength in external demand. This brings the overall economic growth for 2021 to 3.1%. On a monthly basis, GDP turned around to record positive growth in October amid easing containment measures. On a seasonal adjusted quarter-on-quarterly basis, GDP expanded at a strong pace of 6.6%. On the supply side, all sectors recorded an improvement in the fourth quarter. The manufacturing sector registered a strong improvement driven by both continued strength in export-oriented clusters and recovery in domestic-oriented industry. Services sector rebounded, supported by higher spending in consumer-related activities with the reopening of the economy. Agriculture sector recorded positive growth led by improved oil palm yield, benefiting from higher rainfall in early part of the economy. Meanwhile, the mining sector declined at a slower pace as higher production in selected oil and gas fields, including the Petronas floating liquefied natural gas dual PFLNG2, had partly offset facility closures for maintenance purposes. Growth in the construction sector also contracted at a slower pace given the gradual improvement in construction works following reopening of the economy. On the demand side, growth was led by the improvement in private consumption and trade activity. Private consumption growth turned positive, primarily supported by the relaxation of containment measures. In particular, spending on discretionary items such as restaurants and hotels, as well as recreational services, rebounded during the quarter. Meanwhile, private investment recorded a smaller contraction, underpinned mainly by higher growth in machinery and equipment investment in the export-oriented industry. Similarly, improvement in the public investment was attributable to smaller decreases in capital expenditure by both the general government and public corporation. Public consumption grew at a slower pace amid moderation in supply and services expenditure. Net export improved on account of higher export growth amid strong external demand. With that, I end my presentation. Thank you. Let me now hand over the presentation back to Gabenor.
Thank you, Dr. Seri, Dr. Uzir. So the rebound in activity in the fourth quarter is expected to continue into 2022. Latest high-frequency indicators suggest that the underlying economic activity remains on the recovery path. All these indicators have exceeded the pre-pandemic levels observed in January 2020. Going forward, the improving income prospect is expected to support a private sector-led recovery. In particular, the growth recovery in 2022 will be supported by continued expansion in global demand and higher private sector expenditure. The global economy is expected to continue to expand, although some moderation in pace is expected for 2022 compared to last year. While the Omicron variant may temporarily dampen the pace of recovery, continued progress in vaccination and the availability of antiviral medications will allow for better management of the pandemic. This would minimize disruptions to economic activity. The trade-led growth recovery will also benefit from the continued global tech cycle, which has remained above trend as digitalization accelerated arising from the pandemic. On the domestic front, growth will be underpinned by normalization of economic activities, acceleration in production activity to fulfill backlog in orders, and continued progress of large infrastructure projects. Improving labour market conditions and continued access to various targeted policies such as cash assistance, hiring incentives, and upskilling and reskilling initiatives will also lend support to overall growth. Notably, the labour market improved significantly in the fourth quarter and further recovery is expected in 2022. Employment levels rose to 166,000 persons compared to about 68,000 persons in the third quarter last year, while the unemployment rate declined to 4.3% as opposed to 4.7% in the preceding quarter. Data from SOCSO also indicated a decline in layoffs and acceleration of hiring. On a year-on-year basis, private sector wages continued to recover after the temporary disruption in the third quarter, registering a growth of 2.5%. The recovery was supported by both manufacturing and services wages. Investment activity is expected to benefit from the positive external demand in the near term and the emerging opportunities arising from the post-pandemic era. Investment intentions, especially by foreign investors, remain forthcoming, particularly in the export-oriented manufacturing industries such as E&E and chemicals. Net FDI inflows rebounded strongly to a record high of 54.9 billion ringgit in 2021, and the previous peak was in 2016 of about 47 billion ringgit only. Higher investment growth will also be supported by the increase in domestic economic activities amid improving business sentiment and higher capacity utilization rates. So going forward, seizing opportunities from global trends such as automation, digitalization, and ESG-related activities with concerted efforts in implementing domestic structural reforms would be critical towards attracting quality investment for Malaysia. This would transform Malaysia's overall investment landscape and contribute towards a much more sustainable recovery over the longer term. However, uncertainties surrounding the near-term outlook remain as the balance of risk to growth is still tilted to the downside. The key risk emanates from the resurgences of severe and vaccine-resistant COVID-19 variant of concerns that could lead to renewed containment measures globally and domestically, which would disrupt the economic recovery. Greater financial market volatility from faster than expected policy normalization in advanced economies, prolonged supply chain disruptions, and weaker domestic sentiments following elevated cost of living could also weigh on growth. Nevertheless, there are some upside potential to the growth outlook from better endemic management, stronger than expected global growth, as well as higher investment spending from faster implementation of policies and projects under Budget 2022 and the 12th Malaysia Plan. Headline inflation increased to 3.2% in the fourth quarter as expected, driven mainly by the normalization in electricity bill. Higher prices for some core and price volatile items also contributed to the increase. Core inflation edged higher to 0.8% during the quarter, and this reflected improved demand conditions amid the environment of high costs. Moving forward, headline inflation for the year as a whole is likely to remain moderate. This is due mainly to the decline in fuel inflation as the base effects from fuel prices dissipate. However, there remain cost pressures from elevated global commodity prices and supply-related disruptions. In this environment, and as economic activity normalizes, underlying inflation, as measured by core inflation, is expected to edge upwards. The increase, however, is expected to remain modest, with upside risk contained by the continued slack in the economy and in the labour market. The extent of upside risk to overall inflation will also be partly mitigated by administered prices on some necessity items. The outlook continues to be subject to global commodity price developments amid risks from prolonged supply-related disruptions. Turning to monetary policy, the MPC deems the current stance to be appropriate and accommodative. Going forward, the monetary policy stance will continue to be determined by new data and their implications on the overall outlook for inflation and domestic growth. In the fourth quarter, domestic financial market conditions remain supportive of the economic recovery. Since the start of 2022, domestic financial markets have been affected by expectations of tighter global financial conditions. So far, these adjustments have been orderly and in line with regional economies. Going forward, while domestic financial markets will be subject to bouts of volatility, the bank will ensure orderly market adjustments and expects financial and economic spillovers to be well contained. This is due to Malaysia's deep and liquid markets, strong banking system, and the more dominant role of domestic-based financing. Net financing expanded by 4.7% as at the end of the fourth quarter, reflecting higher outstanding loan growth. Outstanding household loan growth increased to 4.2%. There was substantially higher loan applications and disbursements during the quarter, particularly for the purchase of houses and cars. For the business segment, outstanding loan growth increased to 4.8%, reflecting higher growth in working capital loans. Growth in financing for investments also saw some improvements when growth turned around to record a 1.4% compared to a decline of 0.1% in the preceding quarter. Financing by banks continued to support SME businesses as they resume operations and business activities. Outstanding financing to SMEs expanded by 4.9% as at end December last year, with the fourth quarter disbursements and repayments rebounding strongly to above pre-pandemic levels after a moderation in the third quarter amid the FMCO. By sector, disbursement for SMEs in the services sectors has been forthcoming, while disbursements to SME manufacturers also recovered. While credit risk levels remain elevated, the number of households and businesses seeking repayment assistance has dropped significantly from the peak in July 2021, in line with the gradual recovery in the economy. Banks continue to maintain prudent provisioning levels to absorb potential credit losses. However, the accumulation of additional provisions has recently been at a more moderate pace, given preemptive provisioning carried out over the last 2 years. Demand for loans is poised to increase as the economy recovers. In this regard, the banking system remains resilient and well-positioned to support the ongoing economic recovery. This is evidenced by healthy capital buffers to absorb credit losses, as well as ample liquidity to preserve the lending capacity of banks. Following the Financial Sector Blueprint 2022 to 2026 launch, we will now focus on implementing near-term priorities in collaboration with the industry and relevant stakeholders. These include, firstly, establishing and operationalizing a dedicated platform for alternative finance to spearhead a holistic development of the ecosystem involving Negara Malaysia, the Securities Commission, and other relevant stakeholders such as industry players. Secondly, continuing to promote the fair treatment of financial consumers. This includes advancing measures to promote the sustainability and affordability of medical and health insurance takaful amid rising medical claims inflation, and collaborating with the Ministry of Finance and the Securities Commission to enact the Consumer Credit Act. Thirdly, finalizing the digital bank applications with an aim to notify all applicants by end of March this year. Fourthly, driving the implementation of the climate change and principle-based taxonomy to facilitate the assessment of climate-related risks and encourage financing of green activities. Finally, setting up the MIFC Leadership Council as an industry-led vehicle for MIFC work programs to spur Islamic finance further. Let me now conclude the briefing. Growth rebounded in the fourth quarter of 2021 as economic activity resumed with the easing of containment measures. Growth was also lifted by the strong external demand. The near-term outlook is expected to remain challenging given the pandemic-related developments, potential weakening of sentiments amid higher cost of living, and supply chain disruptions. Nevertheless, growth momentum is expected to improve, underpinned by continued expansion in external demand, recovery in labor market conditions, and targeted policy measures. Headline inflation for 2022 as a whole is expected to moderate, while core inflation would edge higher as economic activity normalizes. Going into the medium term, growth-oriented reform priorities must continue, notably in strengthening the labor market resilience and attracting quality investments for a sustainable and more durable recovery. Now I have come to an end of my presentation. I understand you will have a whole host of questions for Datuk Seri Uzir and myself. I'll be happy to take those that are related to the bank. Thank you.
Thank you, Governor. We're now moving to the Q&A segment, and we have got a couple of questions. The first question is on growth, specifically. The question goes along the lines of like, given recent developments on Omicron and the spread and the increasing cases, and also the shock from the floods, how does that sort of affect Bank Negara's growth outlook going forward?
Well, as per our usual practice, we will be publishing our official economic forecast when we release our economic and monetary review. And this year, it will be on 30th March. So what we have seen since the release of the official 2022 forecast in October last year, there has been several major developments. Most importantly, the economy has reopened. and Malaysia's exports continue to register solid growth. However, there are also setbacks from the recent floods in December and challenges from the Omicron variant. With the floods, we saw the livelihoods of many individuals and businesses affected. However, we have seen a resumption in business activity since then. Our assessment is that flood relief measures and post-floods rebuilding efforts will partly mitigate the impact of the floods to the 2022 GDP growth. I also would like to highlight that our disaster relief facility is still open for affected SMEs and micro enterprises to apply. On Omicron, given that this variant is highly infectious, we have to be prepared that cases will continue to rise, perhaps even higher than levels since last year. Although most cases are asymptomatic, work absences due to sick leave and quarantine could affect productivity. That being said, what we know is that Omicron is less severe than Delta and hence has a lower risk of overwhelming our healthcare system. Furthermore, our relatively high vaccination rate, as you can see in the chart, the ongoing booster program and the start of children vaccination will further contain the adverse impact of Omicron. So, with all these factors in mind, the expectation is for limited disruption to economic activity and spending. But having said all this, we will remain vigilant on developments going forward, in particular the trajectory of the pandemic and its impact on our healthcare capacity, and the extent to which supply-side disruptions continue to pose outward price pressures. So adverse developments on these fronts may weigh on growth.
Thank you, Governor. The next question will be on inflation. We have actually quite a number of questions on inflation from Reuters, Berita Harian, even Nikkei. So I'm trying to group them together. So broadly, the question goes like, the US Federal Reserve is already expected to tighten its monetary policy in response to inflation, and they no longer see it as a transitionary sort of event. So the question is like, what's our response to this? And do we see such pressures in Malaysia and the similar inflation dynamics in Malaysia? Governor?
Well, I want to perhaps start with comparing the situation in the US and in Malaysia. So our situation is different from the US in several ways. The persistently high inflation in the US is the culmination of an acute supply disruption and strong demand pressures. And the strong demand in the US is supported by the firm recovery in its labor market and wages, as well as exceptionally large fiscal stimulus. This, together with supply chain disruption and pandemic-induced shrinkage of the workforce in the US, have resulted in higher and more persistent inflation. In contrast, for Malaysia, while we see recovery in demand amid the reopening of the economy, income growth remains steady and inflation is more of a supply-driven phenomenon. And while inflation is expected to remain high due to cost factors in the beginning of the year, for the whole of 2022, we expect inflation to remain moderate, closer to its long-term average. There is also continued slack in our economy and job market. So as such, core inflation is still expected to remain modest. Notwithstanding all the factors that I had mentioned, we will remain vigilant of all the ongoing developments in demand and cost pressures, and will continue to actively engage with industry players to examine evolving price dynamics closely as economic conditions improve.
Thank you, Governor. The next question that we have is on household spending in particular, and the question is quite a straightforward one. It's like, do we expect like private consumption to support and sustain our economic recovery going forward?
We expect household spending to continue to support growth this year. The easing of the containment measures and improving job market and income conditions are factors that will lift consumption activity. However, developments surrounding the pandemic, particularly if utilization of healthcare capacity comes under stress and price pressures from supply constraints, may weigh on sentiment and actual spending. So these are the downside risks to private consumption this year.
Thank you, Governor. The next question that we have is on, given the concerns on inflationary dynamics, the next question is that, are we expected to see hyperinflation and stagflation in Malaysia?
Wow, hyperinflation. No. Hyperinflation is an extreme event where monthly inflation rates are in high double digits. And if I recall, some IMF studies use 50% as a benchmark. And if we look back in the last 30 years, the highest inflation rate that we have seen is, according to my table here, is about 8.5% in July to August 2008. If you recall, when oil prices almost doubled, it doubled from $74 the year before to nearly $150 per barrel. So we are nowhere near that. Since I'm on this topic, I also heard that there were also some chatters about stagflation as well. So let me just address that concern too. Again, it is highly unlikely for a 1970s style stagflation to occur, where we suffered both stagnant economic growth and high inflation for a prolonged period. We expect growth to be higher this year, and for Malaysia's headline inflation to remain moderate and close to its long-term average in 2022. So while core inflation is expected to normalize, its upward pressure is contained by the continued slack in the economy and the labour market. So this inflation outlook, however, like I said, is still subject to the latest global commodity price developments and risk from supply-related disruptions.
Thank you, Governor. The next question is, I think, is quite a popular one, and it regards the bank's policy support going forward. And the question goes like, given that the economy is now recovering, is Bank Negara expected to increase interest rates, and is the bank expected to sort of like withdraw its policy support much earlier? And there are some analysts have also noted the removal of the line in our MPS on the policy levers. Governor, any comments on this?
Well, you know that I can't preempt the MPC deliberation, and we are going to have our MPC in slightly more than 2 weeks. So you would have to be patient and wait for our NPS. But what I can say is that as of our last meeting in January, the MPC deems our current monetary policy stance to be appropriate and accommodative. And on the question on the removal of policy lever line from our MPS, I know that there has been a lot of discussion on this. So let me explain. We no longer felt the need to reiterate the sentence, as we have sufficiently shown the continuous use of our various policy levers to support the economy. Going forward, we will continue to ensure that our monetary policy stance remains appropriate. So that said, we will remain vigilant of the latest developments and any new data. Any adjustment to the degree of accommodation will depend on how these developments will affect the growth and inflation outlook. We are also mindful to avoid a premature withdrawal of policy support that can affect the recovery. if I'm not mistaken, the second question, or the second part of the question was whether we are worried about the Fed raising rates. On this, I would like to highlight that we conduct our monetary policy premised on us achieving price stability and sustainable growth in Malaysia. So we will assess global developments through the lens of whether they affect the balance of risk on our inflation and growth outlook.
Thank you, Governor. The next question is regarding NPLs, and it's a quite straightforward one. It's what's the latest development on NPLs, and is it manageable?
On this, I'm going to ask Jess to help me answer this question.
Thank you, Governor. So while the credit risk outlook will still remain challenging given pandemic developments, we do expect these risks to be manageable. Three factors. Number one, the banks have built up substantial provisions to date, and we are expecting most banks to maintain these provisions for the most part of 2022 as well. So that will help buffer potential credit losses. Number two, with the repayment assistance programs progressively coming to an end, banks are also increasingly engaging borrowers, so they have more visibility into the credit worthiness of borrowers, and that will help ensure that provision levels remain adequate. And number three, for the most vulnerable groups of borrowers, repayment assistance programs remain in place for them, particularly the URUS program. So that will again provide support for asset quality in the near term at least. And also last year we published our macro stress test results, and there we, under a very adverse scenario, which was actually worse than even the Asian financial crisis, we projected impairments to go up potentially to 5.4% of total banking system loans. And that even under that scenario, we expect the banking system capital ratios to remain comfortably above regulatory minimums. So we will be updating our stress tests, and we will publish the results in the upcoming release of the Financial Stability Review.
Thanks, Jess.
Thank you, DG Jess. You did mention about URUS, so that's a very nice segue, because the next question is about URUS. There are a couple of questions like from Bernama and so forth. I'm just going to group them together. So basically for URUS, the question goes like, why is the application deadline extended? Is there any conditions that we think of extending that deadline? And more importantly, is it enough if it's just limited to just the B50? Governor?
Okay. The banking industry announced a few weeks ago that the URUS application deadline would be extended to March 31st. This decision took into account the recent floods, which affected many households and businesses, and compounded difficulties faced by some borrowers, even though most of the businesses are already resuming activity and the job market is improving. So recognizing that affected borrowers may need more time to get back on their feet, the banking industry extended the URUS application period to ensure that support continues to be available to such borrowers. So as the economy begins to recover, it is also important for us to shift our focus towards implementing the necessary reforms to raise productivity and income. Malaysia, we cannot afford to miss the boat, especially if we want to be competitive in the emerging spaces of opportunities post-pandemic, be it in the green economy, digitalization, or supply chain resilience. This is where we need to coordinate efforts between the public and private sectors to improve the prospects of success from these opportunities. With this, we can then deliver quality jobs, and households can then steadily build up the financial buffers and resilience over time. So Jess, do you want to add anything?
Thank you, Governor. Maybe just on URUS, again a reminder that URUS is a targeted help measure for B50 individuals, but that does not mean that there is no help for other borrowers. And it also doesn't mean that come the end of March 2022 or July, for those who have taken up flood assistance programs for their banks, that there will be no help. Banks have in place ongoing restructuring programs to assist borrowers who continue to face financial difficulties. So borrowers that do need help should approach their banks for it. Thank you.
Thank you, Governor and DG Jess. The next question is on CIMB. It's a question from China Press. And the question is, what is Bank Negara's comment on the recent CIMB processing error?
As CIMB has explained to the affected customer, it has recently detected incidents of excess funds being wrongly credited into their accounts. So as such, we have required CIMB to ensure that efforts to recover these funds do not affect customers' ability to access their accounts and to allow reasonable options for customers to return excess funds. We are looking into the specific circumstances surrounding this incident, and we will take appropriate supervisory and enforcement actions if the findings reveal any breach of legal or regulatory requirements, including adhering to acceptable risk management standards that we expect all financial institutions to observe.
Thank you, Governor. Thank you on this. The next question is regards to the PM's announcement yesterday on home financing models. So specifically, the question is, in the PM's press release, BNI has been told to review the home financing models to help like B40 and M40 own homes. So what is Bank Negara's comment on this recent development?
So can we have that slide back on the financing to household? So banks have been highly supportive of home ownership. In 2021, banks approved more than 60 billion ringgit to first-time house buyers. And of this, more than 60% of the new loans approved were for properties priced 500,000 and below. So on top of this, there are also numerous guarantee schemes in place to support home ownership, especially for the lower income group. And if I recall, Jagamas has a scheme called Scheme Rumah Pertamaku, and under BSN they have this scheme called Scheme Jaminan Kredit Perumahan. And so these are some of the schemes that are available to help first-time house buyers. But we understand that since the pandemic, a lot of things have changed. This includes the realities around housing demand. Financing models may also need to adjust. For example, as remote working becomes more common, prospective buyers may be more open to buying properties outside of the city center. There are already rent-to-own financing schemes, and for those working in the growing gig economy with less predictable sources of income, improved access to alternative data such as utility and telephone bills and rental payments can be a source of credit assessment by lenders. So, and this can be supported by an ecosystem that facilitates greater data sharing, not just among the private sector, but also the government agencies. And this is, if you recall, is one of our recommendations outlined in our recently published financial sector blueprint. So the bank has always maintained that while it is key, this is not an issue that can be addressed by financing alone. At the end of the day, most housing is still too expensive for many Malaysians. So we need to address this too, even as we embark on more innovative financing solutions. This includes dealing with the acute supply and demand mismatch in the housing market, improving house price transparency, and ensuring a vibrant rental marketplace is in place for those who are not ready or do not want to own a house.
All right, thank you.
I'm not sure. Maybe Jess or Rashid, do you want to add on this point? Okay, all right.
Thank you so much, Governor. We have another question. If you don't mind, Governor, we're going to pivot back to growth again. There's a question from Nanyang specifically on the borders reopening. So the question goes along the lines of like, given that the NRC has agreed to open borders, again, given what you just mentioned on all the growth outlook and the bank's growth outlook, does Bank Negara predict that growth will accelerate in 2022?
Well, I said that we are going to publish our forecast next month, but I'm going to pass the question to Rashid to elaborate pending the release of our official forecast next month.
Sure, Governor. Thank you, Governor. I think as Governor has mentioned just now, economic recovery is already underway, as we have seen in the indicators performance with the general reopening of the economy. But with the travel risk aversions, restrictions by other countries, resurgences of cases, and also potential emergence of the variant of concerns, recovery in tourist arrivals is only expected to be gradual. And it's business-related travel that could aid a faster implementation of FDI, that's related projects, and also further support our growth. But on the whole, I think the border reopening will definitely help to increase activity further, especially for the tourism-related industries who were significantly affected by the prolonged pandemic. So definitely, it will certainly help this segment of the economy, Governor.
Governor, I think we've taken quite a bit of questions with this, so therefore there's one last question to just end it off, and it's on digital banks. I think, and there's quite some eager anticipation on what's the progress on the digital bank license application results, Governor?
We are at an advanced stage of assessing applications, and we target to announce the digital banks during the publication of our annual report, our EMR, and our financial stability review at the end of March next month. What I can say for now is that we received 29 applications, and as we are only intending to license a maximum of 5, we need to thoroughly evaluate each and every single application. We want digital banks to offer relevant products and services to unserved and underserved segments so that more people and entrepreneurs can better own assets and save for the future or to grow their businesses. Not only that, we also expect the entry of these digital banks to accelerate digitalization of our incumbent banks. So this will be good not just for the industry, but also for all of us here as customers of incumbent banks.
Right, Governor, that concludes the Q&A segment. To which, Governor, I'll just pass back the floor to you to do a wrap-up. Governor, over to you.
Thank you for all your questions, and I hope to see all of you back here on March 30th. So before we end, I would like to extend the bank's thanks to Datuk Seri Dr. Uzir and his team for doing this with us virtually. I believe Datuk Seri Uzir has an announcement to make on our 2020 census. Datuk Seri, over to you.
Thank you very much, Gabenor. Before I proceed with this announcement, I would like to also mention, Gabenor, that if we look at the overall GDP numbers for the whole year 2021, so beside that, we register a growth 3.1% for the constant price. The fact that we have recorded a strong nominal growth for 2021 at the 9%. This something did not happen before. If we synchronize the data, see the growth comparison between the current and constant, I think this is the first time that there are gap, the growth performance in terms of real GDP as compared to the nominal GDP. What does it mean? That it contribute also to increase the disposable income, especially in the sector that related to the commodity. That I think to clarify on the performance of the whole year 2021. Move on the thank you, Gabenor, on the giving way for us to share that on the very important event on the 14th of October. Everyone know that we just completed the population and housing census 2020, and every resident in this country, I think including everyone that attended this conference, been part of this this census, the seat census. So I'd like to announce that after passing through the longest census period in Malaysia history due to COVID-19 pandemic. We launched the Malaysia 2020 Census Report, namely key finding population and housing census of Malaysia 2020. And also for very first time, we will release subnational statistic for parliament. We have 222 parliament, as well as state legislative assembly, and also the subnational statistic legislative assembly. So this event will be held on February 14, this coming Monday, at 10 a.m. at the Chancellor Hall, Management Science University MSU Shah Alam Selangor. This event will be officiated by the Most Honourable Prime Minister Datuk Seri Ismail Sabri Yaakob. Thank you, Gabenor. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. I also would like to take this opportunity to wish all those celebrating a happy Chinese New Year. There are a few days of Chinese New Year celebration left, so I think I still have time to wish all of you a happy Chinese New Year. So again, thank you for joining us, and please stay safe. Thank you.